so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, you guys. Today we're going to look at some fundamentals in the housing market that are reflecting an inventory surge and a housing market crash coming a lot sooner than you might think. So we're going to analyze some fundamentals about the housing market just to see what we're in store for. So mortgage rates lead sales. Sales lead price. Price leads inventory. So that's what we're going to deep dive in today. And we're going to read an article by Seeking Alpha titled Housing Market Big Picture, Rates Rise, Sales Downturn, Price Peak, Inventory Rise. And y'all, this is one of my favorite articles as far as how it breaks down the fundamentals of the housing market. So what I really want to suggest that you guys do is go to my description and click on the link so you can analyze this entire article by yourself. There's about 10 graphs on here that I'm not even going to reference, but this is some really great stuff, you guys, that kind of talk about things that we really haven't been talking about too much, and it really digs into them in great detail. Now, remember, I'm not a financial advisor. I'm just a YouTuber, even though my profession is a realtor in Houston, loan officer in Texas, and an instructor all around town. I absolutely love instructing. I instruct for the state of Texas. We're continuing education for realtors. So I really like analyzing things and then just breaking it down. Now, if you guys could please do me a favor, like this video, subscribe to my channel if you haven't. And as always, please comment below. You have no idea how many people you're helping, including me. But let's get started on this article right now. Again, you guys, I really want to encourage you to read this article on your own. But here's the summary. The housing market typically follows an ordered pattern. Mortgage rates lead sales and construction, which in turn leads prices, which in turn lead inventory. In the past few months, there has been a sharp spike in mortgage rates to a 10-year high. The increase in rates has led to a decline in mortgage applications and home sales, which can be expected to continue and spread to construction. Prices are still rising at a near record pace, but are poised to hit a wall. Inventory declines are abating, and inventory can be expected to trend higher for an extended period. So it's kind of fair to say that interest rates lead a lot of what's going on in the housing market. So with the sudden surge of interest rates right now, what y'all need to remember is you need the surge of interest rates to do its job. There is so much dust that has been shuffled up right now because of the rug pull type skyrocketing of interest rates. The dust has not even settled. What we need to do right now is let the interest rate surge do its job. And what we need to do right now is we need to sit back and watch the inventory increase and watch the prices go down. And the beautiful thing about that, y'all, is we have so much data and we have so many sources of data. We're going to be able to watch that happen right before our eyes. Now let's continue the article right now. While other things like demographics come into play, it's clear that a year-over-year increase in rates has always led to, at very least, a sharp deceleration in permits, typically with a 3 to 6 month delay. Housing starts typically turn slightly after permits. I have included them in the analysis because of the huge number of housing construction that has not started in the past year due to construction material supply issues. I have also averaged them quarterly to cut down on noise. Additionally, the increase in mortgage rates has already caused mortgage applications to sink to a near 3-year low. So again, you guys, I repeat, allow the surging interest rates to do its job. Let's continue this article. Again, there has always been a 3 to 6 month lag between when housing permits turn and when price changes accelerate or decelerate. The big year-over-year surge in permits that began at the end of 2019 did not show up in prices until after the March-April 2020 lockdowns. Permits and starts continued to soar into early 2021, and prices soared as well. Since the beginning of this year, permits have turned slightly negative year over year, while starts have not yet turned. we should expect house price increases to decelerate sharply and potentially even reverse between now and the end of the year. So did you guys hear what that just said? Between now and the end of the year, essentially home prices and home values, it's going to hit a wall. And between now and then, we're going to start seeing a drastic slowdown. But not only that, in some areas, we're going to see negative equity. And I believe in almost all areas, we're going to see negative equities starting at the end of this year. But as you guys are starting to hear more and more on my channel, there's other people now coming into the mainstream media, essentially warning us of a housing market bubble and a housing market crash. And it's very intriguing to see why they think that, what data and what trends they're following to predict that. But you guys, it's really, really refreshing that more and more people are sounding the alarm, not to scare you, not to freak you out, but again, empowerment. Right? Empowerment. It is so important to be empowered so that you can redirect your life as necessary to achieve your goals. Let's continue reading this article right now. Inventory turned positive in June 2018, then negative July 2019, and have continued negative ever since. Although, as you can see, the trend is moving towards turning positive. Thank you, interest rates increasing. In short, even with respect to existing homes, sales leads prices, which in turn lead inventories, although sometimes inventories and sales move in opposite directions almost simultaneously. But even then, with sales slightly leading. To sum up with regard to prices versus inventories, house prices, while increasing, decelerated beginning in 2019 and turned sharply higher only after the pandemic lockdowns of early 2020. Meanwhile, inventory continued to decrease year over year, with the year over year level of decline appearing to bottom out in early 2021, with a sharp increase in prices during 2021. As expected, inventory declined at a slower rate year over year since then, and we can expect it to turn higher in the next few months. So, and you all know I've been saying this housing market is a COVID housing market, and the lockdown essentially messed us all up. And what I mean by messed us all up is because of the lockdown, when the lockdown was removed, everyone flooded to purchase real estate, essentially because they were locked down. But also remember this: record low, historically low, never before seen low interest rates. So cheap money, essentially cheap money. And what that caused is our housing market to get completely out of control. So much so, it is now dangerous for any new home buyer coming into the market to purchase right now. Everything is completely out of control. But let's continue reading this article and let's finish it out right now. The above examination of the housing market has shown that since the pandemic hit, it has behaved in accordance with the model. In 2022, with historically low interest rates, sales and construction of new homes boomed. Prices followed, as buyers chased home buying inventory continued to decline. But then, as interest rates have climbed even higher in the past 16 months, sales and construction peaked. Price increases are likely close to peaking as well, while inventory is on the verge of increasing again. The pattern is almost the same as the 2003 to 2006 boom or bubble period. Even as sales growth slowed and then reversed, prices climbed ever higher at brisk rates, while inventory, which had slowly declined, reversed course and rose. Even after the pricing dam broke, inventory continued to rise before finally following both sales and prices down. So I really like this, you guys, because it's really doing a good job at comparing the trends of rates, prices, inventory, and things of that nature compared to the 2003 to 2006 bubble formulating, right? So the same type of bubble has formulated right now. And I really want to encourage you guys once again to stop what you're doing, go to my description, click the link, which is under data source, and really dig into this article, okay? But what I want to do now is kind of close out this video with some final opinions that I have formulated after reading this. It should give you a lot more encouragement that if you are waiting, you're doing the right thing, because what it's breaking down is really the science and the fundamentals of a housing market and a housing market crash. So really analyze this, guys. We have science now, we have data now, we have fundamentals now that essentially is saying that if you're waiting right now, you may be making the smartest decision of your life, because we may be entering a housing market in a very short amount of time that will be the best buying opportunity in a very, very long time. This housing market, and a lot of people haven't said this yet, but I believe this housing market could potentially be worse than the 2008 housing market collapse because of the way that this housing market formulated and how much fear of missing out actually went into the housing market and the price increase. Essentially, it's completely out of control, and I'm really worried about anyone that's going to purchase right now. Not necessarily right now, a little bit right now as it's kind of trending into a positive direction to buyers, but really in the last few months. If you purchased in the last couple months, the last few months, I'm really worried about you. So it is what it is. But if you're waiting on the sidelines, let this article, let this data, let this fundamentals give you hope, give you reassurance that what you're doing is the right thing. And essentially, you're avoiding, in my opinion, financial suicide. One of the things that we don't want to happen to Americans and homeowners is we don't want people to be trapped in their house. And I'm not talking because they have a low interest rate. People sell and people buy for a lot more reasons than interest rate. I'm saying be trapped in the house because of upside down equity. If you're upside down in equity in your house, you're chained to your house, which may be okay if you're going to live there for 10 years, right? That's fine. Long-term mindset, solid job, plenty of money, no consumer debt. Buy right now, wait it out 10 years, that's fine. But most people have to move out, and most people move out in 5 to 7 years. So if you can't move out in 5 to 7 years for whatever reason you have to move, that can create foreclosure and very difficult financial times. Not to mention your credit will be completely destroyed for several years if you do go into foreclosure. So I want you guys to pat yourself on the back if you're waiting in the housing market. And also one last thing I want to end on. A lot of people ask me questions. And by the way, that CPI report this morning, unbelievable. We're in a much worse situation than I think a lot of people are realizing. And what the heck with the stock market? It is a bloodbath right now in the stock market. But anyways, what I'm saying to you is, besides the stock market stuff and all of that, monitor your local market. Even use Zillow if you have to. But I need you guys, for your own empowerment, to follow the trends yourself in your local markets. Each local market has an MLS, a multiple listing service. So it shouldn't be hard for you guys to find that data, but I want you to educate yourselves and not have to rely on anyone else. What I want you to do is form your own opinions, self-empowerment, self-growth. Keep watching your local markets, and then comment below. Comment below right now if you can, and give us an update on your local market. Let us know if you're seeing houses on the market longer, price cuts, buyer's incentive, homes coming back on the market after they were on contract. Comment below, let us know your area, and give us the intel, because I can only see Houston, right? Houston's what I'm intimately analyzing. So I need more intel from across the nation. Now, I always appreciate you guys. Thank you for following along with me on my videos. Obviously, I plan to purchase real estate and take you through that with me, show you what I'm doing to purchase, show you some strategies. But right now, it's hold time. So I really appreciate you following me. Now, if you're investing in real estate, I do wish you luck, and I hope you win.